Ladies and gentlemen, Joshua Salvetti, welcome back to another lesson of the High Performance Trader. See, today I want to break down something that is critical to becoming and getting consistent results in the market, and that is a simple, systematic, repeatable approach, right? See, we go through this stage, right, when we're learning how to trade, where we overdose, literally, mentally overdose on knowledge. Right? We learn tons of different edges, tons of different strategies. We're constantly strategy hopping, right? Because we're trying to rush the learning curve so fast. We'll literally take a strategy off the internet, try it. If it works for us, that's great. If it doesn't work for us for a week, we throw it out the window, learn another one, learn another one, learn another one, go on for about 2, 3, 4, 5 years, like I did. And next thing you know, you've got a mental state of paralysis in the market, meaning you can't even make a move, right? Because you have so many contradicting beliefs in your brain where you're not really able, you see a setup you like, and that may align with one strategy you've learned, but it may not align with another strategy you learned, right? So instead you get this mental confusion, right? This mental fog that literally keeps you from making a trade. And then when you finally put on a trade, it's a garbage trade. It's super low probability, right? And then you look back when you're journaling and you go, oh my Lord, what was I even thinking, right? So my goal today, right, and my main goal for 2024 was to first come up with a clear objective of the trader I wanted to become and what sort of mentor I wanted to be, right? So for me to be the absolute best mentor out, I need a very simple, systematic, repeatable approach, right? And like, once again, guys, trading is one of these things in life where nothing is simple, nothing's repeatable, nothing is systematic until you can change the perspective of how you view the market information, right? So before we go any further, guys, if you want to get involved with my team, right now, I am offering a amazing mentorship, right? It's a 6-month mentorship where we break down the stock market knowledge, options trading knowledge, but most importantly, becoming a master of yourself. See, self-mastery in trading is literally hand in hand. Until you learn to master yourself or your own emotions, you're never going to be able to master the market. See, consistency isn't about becoming the smartest person in the room. Consistency is all about becoming the most aware, the most fluid. You must learn to achieve flow state. You must literally rebuild your relationship with the market in a form and in a matter of a healthy, consistent relationship, right? And I want to show you how to do that. Also, our Discord, it's not an alert Discord, right? Even though, yes, we trade live, we call out trades, our team kills it. But my goal is not just to give you a fish. My goal is to teach you how to fish, right? See, give a man a fish, he eats once. Teach a man to fish, he eats for generations, right? This is my goal, guys. I want to show you exactly what's worked for me, right? I know there's a lot of garbage out there on the internet, guys, but I am here as the most authentic version of myself, and I am here to literally provide you with the absolute best value possible, right? Right now, I'm giving away Trader Bootcamp, Market Philosophy, both my online courses for absolute free in hopes that you learn enough to want to come work with me, right? I'm trying to build a team of killers out here on the market that are strictly disciplined and that can approach the market in a simple, systematic, repeatable approach in trusting the process, right? So the day I'm going to be talking about is 1/5/2024. So this is the day we actually went live on yesterday, right? We went live on the Discord and called out this trade. And I really, really want to break down in depth how our approach, our simple, repeatable, effective approach worked flawlessly in this scenario, right? So first thing I want to point out is over here on Qs. So every single, well, actually, let me first show you the exercise, right? And now this is something that I give strictly to my people in my mentorship, right? And I thought it's so valuable and they've been getting such good results. I was like, I need to share this with the world, right? So this is basically how I approach the market each and every single day. Okay, so this is called the open print day trading exercise, right? And basically this is more geared toward the first couple hours of the day, right? I'm talking from the bell going off till about noon, right? And sometimes it's more, but the thing is, the fundamentals within this strategy can work at any time during the day, right? So number one is identify a bullish and bearish market imbalance, right? This is your pre-market plan. right? This is learning to identify a level up top and identifying a level up down low. So let's just run through how we traded Qs this day. So you can see I am a trader of structure. I love structure. Structure tells me absolutely everything I need. You guys know I'm constantly talking about structure, right? And what is structure? Break and retest. Large time frame, small time frame, doesn't matter. The market moves in a structural basis. And if it doesn't, that's telling you something, right? This is what I call healthy relationship, which is, break. Look at this, perfect. We got resistance over here at 39429, right? Say the market looks something like this. You're trading within a range. Boom, we break above it. Come down for a beautiful retest, right? This is what I call bullish structure. This is what I call bullish market conditions. So if I could see something like this, I'm looking to trade with bulls. So as the market rips up and it's making its healthy structure, right? This on the 4-hour time frame, you can see we start to break. It starts to get a little less healthy, right? I mean, we're still getting flawless break and retest here, but still at the same time, we are no longer making higher highs. Now we're breaking and making lower highs, right? So now conditions have changed into a bearish market conditions, right? And basically, guys, once again, all what I'm doing here is identifying a bullish and bearish scenario for my pre-market plan. So when price comes down back into 39429, we're retesting this previous bullish structure. So I have to ask myself, if buyers show up at this level, right, where does it make sense for me to target, right? Where is the imbalance? So my first imbalance, right, is going to be over here at 39803. And then my next imbalance is going to be this structure. Because think about it. If price breaks below this, comes up for a retest, this is a pretty high probability area for sellers, right? But if buyers can break through that, this thing's going to soar even higher. But we're not going to get ahead of ourselves. Price is opening up right at 39450. What's my bullish scenario? I'm targeting structure to the upside. And if this level cannot hold, I'm targeting structure to the downside. So that is rule number one. Identify your bullish and bearish scenario. Okay, number two. Identify large money taking control of open print via chart pattern or break and retest or structure, right? So now when I say identifying large money, this is where my 3-step approach comes in. Critical level, right? There's 3 things I need to see for me to put on a trade, right? So once again, I have my bullish scenario, I have my bearish scenario. So if I can see buyers defending open print, and I'm gonna show you what that looks like, I need to see the critical level, right? I only trade off levels of interest, right? Which would be open print. I need to see structure, which is some sort of chart pattern representing the bank behavior. Double bottom, break and retest, my all-time favorite. And I need to see a healthy relationship between price and the 9-day EMA, right? That is the 9 double exponential moving average, right? I'm going to show you guys today what a healthy relationship looks like, what an unhealthy relationship looks like with this tool. And it has really helped me. These 3 things, critical level, open print, structure, human behavior, right? Chart pattern, and then the 9D EMA, right? Coupled together is going to give you a very high probability setup. So once again, that was us on a larger time frame. Let's map out those profit taking points. So the market looks something like this pre-market, right? Where we're actually hovering below previous day low, which is very bearish. But once again, we're coming into that level. I'm remaining present, right? And that's the most critical part. And that's what's so effective about my strategy, is it keeps you in the present moment. We literally pull out all the predicting. We're not here to predict. We're not here to go, oh, this thing's going up because it's bouncing up. No, I need to see bank behavior and structure in the now moment for me to put on a trade. And this is going to keep you from making biased decisions that are going to ruin your trading account, right? So notice I have previous day low mapped. Notice I have end of day mapped. And notice I have previous day high mapped. These are my 3 most critical levels that I literally pull from the day before. Now, the reason why these levels are so critical is because the amounts of volume that get traded at these levels every single day. Look at the lows. Massive amounts of volume. Look at the highs. Massive amounts of volume. Look at the close. Massive amounts of volume. So if it's up to us to learn to identify bank behavior, figure out what large money's doing, large money makes their moves with pools of liquidity, right? If they want to make a massive move, they're going to need an area with massive liquidity. So we literally look at these levels when they get retested to see how large money reacts. And that is the trick, right? That is the golden nugget, if you guys want it, right? It is learning to identify what large money's doing at these levels. Remember, I can't just have them show up and see one green candle. I need to see structure. I need to see a healthy relationship with the 9, right? So let's see how this plays out. And I'm going to show you exactly what we were looking for when we got in this trade. So I have pre-market high mapped out, which was a 39688. I have my first target of 39803, and then obviously 399 in previous day high, right? So notice how price comes right into 39429. Big candle, big volume, right? That's in pre-market. What's that telling us? Price just ripped into a critical level. That's that break and retest on the 4-hour, right? Price rips into this level and we're wicking, right? We're getting a battle. Next, price rips right in the previous day low, rips above it, and creates an open print, right? Now we're above pre-market high. We're making a steady move to the upside, right? Do we just hop in this trade? Absolutely fucking not. I don't care how bad you want to get in that trade. You do not hop in. This is where self-mastery, this is where self-worth, self-discipline, self-esteem come into play, right? Until you can learn to sit back, be patient, and not chase, until you can do that, you're never going to reach the consistency that you want to become. Think about it. If you can't control your behaviors, right, in the market, how are you going to control your results? How are you going to create consistency? There's absolutely no way. You must learn or develop a system that requires patience. So price rallies up, comes down for the retest off open print, right? We get a beautiful retest. And notice the relationship between price action and the 9D EMA, right? Not once did we really close below it, right? Buyers are defending it. See, I can't show you this, but if you guys go on the YouTube video below of the live trade we took on this, you're going to see we called this trade out. Price rallies right into open print, gets met with some buying. It did not look bullish. Let me tell you, this candle was all the way red, right? And we're literally, me and my partner are on the Discord, my admin are going, oh yes, this is our setup right here. This is what we look for. A massive red candle into a critical level. Because what happens in the last 2 minutes of that 5-minute candle is going to tell you everything, right? And literally, price starts to soak up. Buyers soaking up the liquidity from sellers. This is where we then take the market long, right? We take the market long, and our second target, our first target's 398, and then our second target is up here at 399, right? So what's most important here, guys, is to be able to sit back, be patient. Let's run through the 3 steps, right? First step, critical level. We actually have 3. We have buyers defending previous day low. We have buyers defending end of day. We have buyers defending open print. But for the sake of this exercise, open print is going to be your right-hand man, right? So once again, we have our bullish scenario up top. We have our bearish scenario below. What happens off open print, not the open print, means a retest of open print. It doesn't mean, oh, buyers are showing up at 9:30, I'm going long. No. It means buyers are showing up at 9:30. Let me see what happens in 10 minutes to see if they can still defend it, right? If you can learn to sit back, be patient, and let that happen, you're going to prevent yourself from getting hurt, right? So critical level, open print. Identify large money defending the level via structure. We get a beautiful break, a beautiful retest, and a healthy relationship between the 9D EMA, right? So this is where we take the market long, and you can immediately see buyers came in defending this perfectly. Now, what I really want to point out here is look at how this thing rallies right into 398.99, right? Capturing over a $2.5 move. Price comes down in retest structure perfectly. Pre-market, what level was this? From Wednesday's low, right? Once again, these previous levels are critical, right? Comes down, retest Wednesday's low, perfect. Literally rallies all the way up within pennies of previous day high, capturing a massive market imbalance, right? So guys, once again, let's run through what the strategy and exercise really looks like. Write this down, take a picture. So once you've, number one, you identify your bullish and bearish market imbalance. Number two, you identify large money taking control of open print via chart pattern. Number three, which is the 3-step approach: critical level, open print; structure, which means a retest at this level, some sort of double bottom or a break and retest. That is it, right? The 9-day EMA. See, this tool is a tool of strength and measurement, and you need to be able to understand what a healthy relationship between price action and the 9-day EMA looks like, and what an unhealthy relationship looks like between the 9-day EMA and price action, right? Number four, you exit your trade based on one of three things. That is it, right? Your targets hit, your stop losses hit, or structure breaks, right? And I have other videos breaking that down if you guys want to see it. And then number five, the most important part of this process is log and recreate your trades. Until you accumulate your trading data, you're never going to pinpoint where you're failing. So find a system that you can use, log your trades, and go through how your results are, right? And then tweak your behaviors and your disciplines and your thoughts and align them with the person you're trying to become, right? Number six, rinse and repeat, right? So guys, I really hope you enjoyed this lesson. This is how I get in and out of the market each and every single day. If anybody has any questions, make sure you comment below, guys, and hit a like, subscribe for more content from your boy. I am here to provide the absolute most value possible. I love all of you, and I will see you in the next lesson.